On this edition of FedGov Today with Francis Rose, business as usual at one government location despite what else is going on.
We're not seeing dramatic increases due to the changes in the workforce.
Jim Kaplan of the TSP on FedGov Today in just a moment. First, though, a new tech and cyber leader at the Pentagon. Katie Arrington's performing the duties of the Chief Information Officer of the Department of Defense. You can watch her first media engagement in her new job on demand anytime at fedgovtoday.com and the FedGov Today YouTube channel. The Thrift Savings Plan is celebrating a birthday. The G Fund just turned 38. Jim Kaplan is Director of External Affairs at the Federal Retirement Thrift Investment Board. Jim, welcome. It's great to talk to you again. I'm imagining big cake with a 3 and an 8 candle on it. Is that how you celebrated the birthday of the G Fund, or did you do something else? Welcome, Jim.
Thank you. We were just happy to be able to serve our participants and beneficiaries for that long. You know, that 38 years ago, we took that first dollar into the G Fund that began the TSP, and today we have 7.2 million participants and beneficiaries with over $900 billion in assets under management. We're just really proud to have grown during that time to be able to serve our participants.
The G Fund has been popular ever since its inception, even when the other funds became available. Is that where most folks in the TSP still have money invested?
Well, most folks do have money there because the most popular fund now is to be in one of the life cycle funds, depending on when you plan to retire. And that is the default for new employees as well, is to be in a life cycle fund aiming for the years of their retirement. And the life cycle funds include a combination of the various equity funds, as well as the income and the G Fund. So the G Fund isn't everybody has the L Fund, and there are still a number of participants who are primarily or entirely invested in the G Fund in their own retirement savings.
Another one of the default settings that when people come into federal service is to enroll them at the 5% level that enables them to get matching funds from their agencies deposited into their TSP accounts. And I note at your most recent monthly board meeting, full matching rates for FERS and for the blended retirement system have hit all-time highs, 88.4% for FERS, almost 90% for the blended retirement system. What's driving that? Is it just auto enrollment, or are there other factors that you believe are driving that participation, Jim?
So it's a combination. Auto enrollment definitely helps that people now immediately get the full match, that we let people default into that. And they, of course, can change their savings levels, but at least we want them to get every dollar they're entitled to. As I think I've mentioned in the past, our data scientists take a look at how people respond, and we've been doing outreach on how people can grow with the TSP and how they can take full advantage, and sending emails to those who are below that participation rate of the full match and saying, hey, you know, you're leaving money on the table, or you're partway to your goal. You're at 3%, but only a few dollars more, you'll be at 5%. And so different outreach techniques have been effective, and we try constantly to let folks know the options and opportunities available to them.
How do you measure those outreach efforts? Is it just we emailed this many people and X percentage of them changed their contribution levels to get the matching funds, or is there more to it than that?
Some of it's that. We will try 3 or 4 different styles of emails and see how many people who got a basic email and saying, hey, just a reminder, you can match up to 5% versus somebody else who got one that says you're at 3% and for 2% more, you can get the full match, and see what the response rates are to the different groups. And we did see that when we gave them the amount they were short or reminded them they were leaving money on the table, just saw a slightly better response rate, people who increased their contribution levels, than the people who just got the one saying, hey, it's at 5%.
When you see if you do this, you get this, it makes the motivation pretty clear for folks.
Yeah, and our experts take a look, like what do people most respond to? Do they respond to you're close to your goal? Or do they respond to are you leaving money on the table? Do they respond to a simple notification? And we found that anything above the simple notification did make a difference. It made a couple percent difference on the response rate. But as long as people realized that there was something they could work towards, that they would take that action and get their full benefit.
One of the things that I'm also tracking from the board meeting this month is BlackRock gave a presentation about the degree to which the Thrift Savings Plan funds track the indexes that they purport to track. And what struck me was not so much that the numbers are so close. I mean, it's minuscule, the differences, the variations, but just the fact that they do track them that closely to demonstrate to you and ultimately to participants how closely the funds that they've created track the S&P 500, for example, and so on. Why is that important to you at the board to track, to understand that?
Right. So our goal is not to exceed or be below, obviously, any given index. It is to match that index. Some people misunderstand that. They think that when we use a firm like BlackRock or State Street to help us execute our trades, that we're listening to their advice to go heavy in one particular area, do a little bit more in the other, do a little bit less, or that there are politics involved, that we should invest in one nation or not in another. But that's not the case. We manage the TSP solely for the benefit of the participants and the beneficiaries. And we have set as our goal for the C fund to match the S&P 500, for the S fund, the small and mid-cap S&P index, for the international fund, the MICWI X3. And so really what we want them to do is to match those indexes so that our participants know when they're selecting one of those funds that that's what we are investing in and that it is as close to that as we can make it. Sometimes those advisors do have to make a sampling. For example, on some of the international funds, if we were to buy an international stock, the number of participants in the TSP is so large, it would have an impact on that stock price. But if, for example, in a country in India, we know that 12% of their financial markets is in transportation, we'll make sure that our Indian portion is still 12% transportation, even if we leave a sampling of the smaller transportation stocks on the Indian stock markets out. Because our goal is to mirror those indexes as closely as possible so that our participants and beneficiaries know exactly what they're investing in.
It's really funny to me that you say that some folks think that you're following advice from BlackRock and State Street, because that's exactly the 180 degrees opposite of the whole point of the thrift savings plan, tracking indexes. The whole point is that it's completely passive investing and that there is no active investment component to it at all. Am I on the right track there, Jim?
You're absolutely correct. I think it's because, of course, those companies do market themselves, as do all those private companies, as providing benefits for their customers. And if you were an investment customer with an investment advisor, I would hope you would look for an advisor that gave you good advice. We're not looking for them as advisors. We have professionals here that help us to set up those L funds internally. But really, at the end of the day, we're just trying to match those indexes at a very basic level. And because we're doing so, we can do so for low fees, low costs. Our management fees are incredibly small, again, because of our volume and our size, but because also our direction is just mirror those funds.
We talked a little bit before we went on the air that for the 20 years or so that I've been tracking this stuff, there have been a million different things that people have asked for in the TSP. We want to have a gold fund. We want to have a fund that doesn't invest in this or that type of thing that I object to, and so on and so forth. And that's another element of the kind of thinking that kind of defeats the purpose of the thrift savings plan in the first place. It's mass investing for the most possible people to drive the fees as low as possible is the way I always understood it.
And that's exactly the case. Now, that being said, we do have a mutual fund window, and a very, very small percentage of our participants do choose to set up a mutual fund account where they can assume the fees that come with trading on a market and go out and choose from any of the mutual funds available to them. And if there's one that particularly follows their personal interest or views, they're free to choose to do so. But they do so by accepting that they're going to pay those fees, whereas for the basic funds of the TSP, where there's 7.2 million participants, we can really keep those fees down and keep those costs down for all of our participants.
It's interesting that you say there's a small amount of people that participate in the mutual fund window, too, because one of the arguments whenever those carve-outs that people would ask for came along, inevitably folks would say, oh, there's all these people that want to have access to this. And it's not just me. There's so many people I know want a gold fund or whatever. And to find then that now that option is available, there isn't a huge demand for it, is that I find that interesting.
Yeah, it's less than 1% of our participants have chosen to open a mutual fund window account.
Tracking Thriftline responses, 54-second average wait time, 84.5% of callers waited 20 seconds or less, satisfaction 93.5%. How does that track with trends that you've seen over the last several months and year or so, Jim?
I think anybody who calls one of their banks or a company and gets an answer with a person in 20 seconds or less has got to be pleased. And the fact that over 84, almost 85% of our callers get a response within 20 seconds, I think is just phenomenal on the part of our team. Sometimes there's a little busier, especially during tax season, and it can be a little bit wait, but everybody gets an answer within a minute. A large number of people actually drop off the call because the automated system is such that they can get their balance or update their password and drop off without even needing a person. So we're glad to be able to do that quickly. But we're continue to be pleased by both the fees that we charge are low and the service we provide is high.
With the uncertainty that's going on in the federal workforce right now about RIFs and VERAs and VSIPs and so on, are you experiencing a higher call volume than normal, or is it tracking with what it usually is this time of year and week to week, the time of the month and so on?
Sure. And I think we discussed this last month as well. We're pretty much, this is a busy period for us, tax days coming up in days. And this is regularly our busy time, but we're not seeing dramatic increases due to the changes in the workforce. Now, many of those are deferred resignations, people who've accepted the fork or who've been provided with a reduction in force, but they're still receiving their salary. And we anticipate that some folks will start to accept their retirement payments and set things up with the TSP. But the TSP, we're at a steady state. Our call lines are open, our personnel are fully staffed, we're ready to support our participants and beneficiaries. We're not seeing a dramatic increase in calls or casework or calls from members of Congress about constituents. So for the most part, we're ready, we're able, and we continue to see folks just planning for their retirement and making adjustments as they need to.
Jim, I always appreciate getting an update from you. Great to have you on the program again. Thank you.
Thank you. Glad to be able to support our participants.
You can read more about your TSP account on today's show page at fedgovtoday.com. The Department of Defense and civilian agencies are all in on Zero Trust as the defining construct for their cybersecurity postures. You'll learn how on Zero Trust In Depth, a half-hour FedGov Today TV special sponsored by Booz Allen. You meet leaders from the Defense Information Systems Agency, the State Department, the Government Accountability Office, and Booz Allen. Zero Trust In Depth is available anytime on demand at fedgovtoday.com and the FedGov Today YouTube channel. The Internal Revenue Service gets a thumbs up on financial management. You'll learn about that on the next FedGov Today podcast. That's coming Thursday on Apple Podcasts, Spotify, or anywhere else you get your shows. And you can listen to all of our podcasts on demand at fedgovtoday.com. I'm Francis Rose. Thanks very much for listening. Talk to you next time.